Scott Bauer's going to hit them both with us. Mr. B, good to see you this afternoon. Firstly, bonds.
Likewise.
Finally, we got a little bit of a sell-off. Is this the real deal, or do we get knocked back down to 2.6% unless inflation shows up big?
Yeah, we got that on the news this morning of a little bit hotter than expected GDP number. And like I had discussed with you, Oliver, I think the 260 to 262 level really is a bottom here in the 10-year. I'm not saying that because of the rally that we had today, and we may come back down again, but I really think that's the bottom here. I think we've seen what we're going to see in terms of the contraction, in terms of the 10 and the 30-year coming together here, and I really see the numbers picking up. And I'm not saying that we're anywhere close to being inflationary here, but I do start to see things ticking up here. And I really would not be surprised to see this 10-year trading 280 to 285 in the next maybe 8 weeks or so.
Yeah. So is it time then? I mean, what's gonna need to be behind this? Just consistently hitting data on the nose?
I think not just hitting it on the nose, but actually starting to see a little bit of a beat, a little bit of, and I don't want to call it hotness, but these numbers coming in pretty rich, which I think we're going to start seeing. Once, now the government shutdown is behind us and some of the abysmal weather that we've had behind us, which has maybe impacted some retail sales, consumer spending that we've seen over the last 4 or 6 weeks or so, I really think that we're going to start seeing some really, really strong economic numbers. No way am I saying that, we're inflationary, and I am not suggesting at all that the Fed is going to change course and maybe start to think to raise rates. I just think we bottomed out.
Yeah. All right. So 2.8% is where you're looking. So it's not too far from here. Your point is, look, we need to get a little, relief for the bears, but don't get carried away unless something dramatically changes.
Exactly. And, what happens with the tariff talk, obviously, if we do get some major breakthrough, you may see a spike in rates on that. I wouldn't think that would be real long-lived, but that certainly would be a tailwind behind it as well.
Yeah. One other thing here, do you think about where along the duration, the yield curve, there is going to be the most type of reflexivity? I just think, for example, some of the moves in the 30-year have been pretty sharp, and then we know that part of the curve around the 5s is already inverted depending on kind of where you draw the lines, but we're starting to see, a tiny bit of dispersion here in the bond space.
And I do think the 30-year is where you're going to see it most. I think that is really going to be the most volatile one moving forward here. And like I said, I think the yield curve has maybe flattened out to as much as we're going to see, or at least is attempting to make a bottom here or a low here. And I really see that widening out. And even though I think I see the 10-year here going to that 280-ish level here, I really see the volatility and the spike up more in the longer end than in the 5 or 10.
Okay, let's shift gears. Let's talk precious metal. Also, with a little bit of weakness in the past few days, at long last, gold's run is under question. What do you think?
I've been really bearish. We've talked about this for a while. In fact, full disclosure here, we've owned some put spreads in the GLD. Okay. That being said here, if you look towards the end of January, I think it was around the 28th or 29th, and then a couple weeks ago, you saw the big moves, some big spikes up in gold on really, really heavy volume, big time volume. The fact that we can't sustain that move higher on big volume, especially this last one, to me says, I'm really looking to be bearish gold. We've seen almost a divergence now between gold and the dollar. They're not working conversely or inversely as they normally do. And I just think there's a lot of pressure on this gold space. And I'm not calling for 1,200 again like we saw for most of last year, but I wouldn't be surprised, Oliver, to see sub 13 and maybe 1275 over the next few weeks.
Yeah. All right. Scott Bauer, really like it. Oh, hey, real quick before we let you go on gold, because at the top of the show, I brought up the chart of VIX versus gold, and you do see these big moves in gold over the past couple of years when we have weakness. If stocks continue, though, to kind of flounder, is that an important part of it, or do you think about gold standalone? Hey, forget about stocks. This is about dollar and other things.
you know, for the longest time, you would have to take that into consideration. And if you go back to the last 12 months or so, there was that divergence. You know, you didn't see them move hand in hand. I do think we're coming back into an environment with gold versus the market now of what we've seen more historically, more of the norm.
Yeah. All right, Scott, good stuff, sir. I will see you next week, Mr. Bauer. Regular here on the show. You got it. Thank you. Scott is the CEO of Prosper Trading Academy. We'll be right